Imagine waking up in 30 years, checking your investment account, and seeing a cool $1 million sitting there. Now, imagine realizing that when you withdraw that money to buy a beach house or travel the world, you do not owe the government a single penny in taxes. Sounds like a fantasy, right? Well, it is actually a real financial superpower, and it is called a Roth IRA. If you're sitting on the sidelines of the investing world because you think it is too complicated or only for rich people, you are leaving free money on the table. Today, we're going to break down exactly how this simple account works, why it is the ultimate wealth builder for your 20s and 30s, and how you can set one up this week. Let's demystify the Roth IRA. Think of a Roth IRA like a special, tax-sheltered bucket. The IRA stands for Individual Retirement Account. You do not get this through your job like a 401k. You open it yourself with an online broker. The magic of the Roth bucket is all about when you pay taxes. With a standard paycheck, Uncle Sam already took his cut before the money hit your bank account. When you put that already taxed money into your Roth bucket, it gets a permanent shield. Once your money is inside, it grows completely tax-free. And when you finally take it out in retirement, after age 59 and a half, you pay absolutely $0 in taxes. To understand why this is such a massive deal, let us use a simple gardening analogy. Imagine you are planting a cherry tree. The government offers you two choices. Choice A, you pay a tiny tax on the seed before you plant it. Choice B, you plant the seed for free, but when the tree grows giant and produces thousands of cherries every year, you have to give the government 30% of all your cherries forever. Obviously, you would choose to pay a tiny tax on the seed. That is a Roth IRA. You pay tax on the small amount of money you invest today, so you can keep 100% of the giant harvest later. Let's look at some real numbers to see this magic in action. Let us say you are 25 years old and you decide to invest $300 a month into a Roth IRA. If you invest that money into a broad index fund, which is basically a basket of the top U.S. companies, you might earn an average annual return of about 8% over the long run. By the time you turn 65, you'll have personally contributed about $144,000 out of your own pocket. But thanks to the magic of compound interest, which is just your money making money, and then that new money making even more money, your account balance will have grown to over $1 million. Now, here is the kicker. If you did this in a regular, taxable brokerage account, you might owe the government over $150,000 in capital gains taxes when you sell those investments. But with your Roth IRA, that entire $1 million nest egg is yours. Every single cent. What if you are starting a bit later? Let us say you're 35 years old. If you max out your Roth IRA by contributing $583 a month, which is $7,000 a year, and earn that same 8% average return, by age 65, you will have over $660,000. And again, all of that growth is completely tax-free. The earlier you start, the more time compound interest has to do the heavy lifting for you. It is like rolling a snowball down a hill. At first, it is small, but the longer it rolls, the bigger it gets, until it becomes an unstoppable force. Now, there are a couple of ground rules you need to know. First, because this account is so powerful, the government puts a limit on how much you can contribute each year. For 2024, that limit is $7,000 if you are under age 50. Second, you must actually invest the money once it is inside the account. This is the single biggest mistake people make. They open a Roth IRA, transfer their cash into it, and then just let it sit. They're like a regular savings account. A Roth IRA is just a bucket. You still have to use the money in that bucket to buy investments like index funds or exchange-traded funds. If you do not buy the investments, your money will not grow. Another great perk of the Roth IRA is its flexibility. Because you already paid taxes on the money you put in, you can actually withdraw your original contributions at any time, for any reason, completely penalty-free. We do not recommend doing this because you want to let your money compound, but it is nice to know that your money is not completely locked away in case of a true emergency. Just remember, you cannot withdraw the investment growth penalty-free until you are 59 and a half. Since we are keeping it real, I need to remind you that this video is for educational purposes only and is not financial advice. I am your smart money friend, not your personal financial advisor. So, how can you take action and get this wealth-building machine started this week? Here are 3 simple steps you can do right now. Step 1. Pick an online broker. Popular, reliable options include Vanguard, Fidelity, or Charles Schwab. It takes about 10 minutes to open a Roth IRA on their websites. Step 2. Link your bank account and set up an automatic transfer. Even if it is just $50 a month, getting into the habit of automatic investing is the most important part. You can always increase the amount later as your income grows. Step 3. Choose your investments. For beginners, a low-cost, broad market index fund that tracks the S&P 500 is a great, simple place to start. It instantly spreads your money across hundreds of the biggest companies in America. That is it. No complex stock picking, no staring at confusing charts all day, just consistent, automated investing. Your future self is going to look back at this moment and thank you for taking action today. If you found this helpful, hit that like button, subscribe for more simple money breakdowns, and drop a comment below if you have any questions. See you in the next video.